Hi, good afternoon. You're watching Closing Trades right here ET now, and what a topple the market has actually taken. While we rose up along with the rest of the global cues to start off trade with, that move has gotten undone in the last few odd minutes or so, and you may want to bring up the Nifty financial services as well as the Nifty bank, because that's what's really weighing heavy on the index right now. While the Nifty of course has fallen about 150 points from the top of the day, it's the Nifty bank which has already drifted in the red. Look at what's happening with names like an SBI, which are now down about 0.6%, but that's not imperative. What's important to note is the top from which they've actually fallen, and of course we'll address this with our chartists right now. There you go, the Nifty bank, a sudden topple coming in there, about 17, just about barely actually holding on to the red as we speak right now and drifting even further. There you go, a 1.25% fall from the day's high is what the Nifty bank alone has seen. So not just SBI, there are other culprits as well which are weighing heavy on the banks right now, and it's almost Ajay smacking off the same time yesterday when we were discussing banks and how they're dragging the markets low.
I would congratulate Kunal for his call. He was saying market may actually be ripening for a 700-800 point fall.
Yeah.
I was actually very surprised at today's first half of strength. Yeah. But what has happened is that, what I was observing is that yesterday too, it was the Bank Nifty and the HDFC Bank and Reliance which are the big culprits. Today too, they are actually
and ICICI Bank
ICICI is giving company. Yeah, that's correct. In fact, the highest point in day yesterday, which was 21,750 or thereabout, today we went 30 to 40 points closer to that and then couldn't sustain those levels. Look at Bank Nifty, 48,000 couldn't be reached in today's session's high. And the kind of complete reversal, I'll be watching out for the FI data. Yesterday too, Kunal, if you remember, FIs have actually cut their long position by 4 to 5%. Correct. So it appears that there is some unwinding on the institutional side. Otherwise, such broad-based kind of a reversal perhaps may not have happened. Pull up the mid-cap, small-cap side of the market as well intraday, because there is where the action was happening and the party was getting overextended. Today, intraday small-cap and mid-cap, that will give you, okay, that is also topped off. So what do the levels tell you on Nifty and Bank Nifty right now, Kunal?
The biggest observation which was seen yesterday was a 25% jump in the Bank Nifty open interest. Now, it could be both sides, it could be longs or shorts. We then look at the premiums. The premium was almost 300 points 2 days back. That contracted to 160 points. So it was a swell of open interest with a sharp reduction in the premiums. In fact, throughout the day today, when the Bank Nifty was up some 300 odd points, the premium was not budging above the 180, 190 points for the Bank Nifty, which means that short traders had not cut their positions even after this initial gap up for the Bank Nifty. And right now, when you're seeing the Bank Nifty going down, the premiums has come back towards the 140, 160 mark more or less for the Bank Nifty futures. So that's the major indication which we tend to look out for when the markets are trying to open up fresh legs on the downside. And yes, as you rightly mentioned, HDFC Bank, ICICI Bank, they are the major reasons why the markets are going into a corrective mode. I would still believe that there could be more weakness for these larger cap private sector banks, specifically HDFC Bank from current levels also.
Andrew, hi, afternoon. Want to get you in on the discussion as well before we talk about individual stocks. What is this smacking off? I mean, on the last 2 consecutive days, we're seeing acute selling pressure, a big reversal actually today in place from where we started off today, led by heavyweights like an HDFC Bank, ICICI Bank, SBI. Clearly indicative, like our chartist was suggesting, that there could be some FI selling which could be underway. And I mean, to think of it, start of the year, everyone had a consensus buy call on banks.
Yeah, it's been a perennial kind of underperformer for, a long time now. And it's I thought some of the news or the bad news was out of the way, given some of the RBI's actions. But maybe there's something that we're kind of missing. Maybe there's something more on, unsecured loans that, the RBI is worrying about. Because it's been kind of relentlessly underperformance. And for everyone coming into the year, when you see GDP growth forecast being raised, you would have thought that was a great catalyst for the banks to kind of lead the market higher. That's not the case. So it tells me that there's something that the market is worrying about, which is not yet known to us. And I think that can only be either regulations or some problems with unsecured loans. That's the only thing I can think of at the moment, because there's no reason for this underperformance.
The The small caps, there are some individual counters, Nuresh, which are doing phenomenally well. It appears to be a breakout on JSW Energy. This one did not participate in other power stocks, kind of moving higher last few weeks. Is it breaking out of the range?
So yeah, a little still away from the range breakout. So if we go back, the stock had topped out back in 2020 and around 400 odd levels. Post that, over the last few months, it has made a couple of tops around 440 to 460 levels. So that's a range that needs to break out. But overall, making higher tops and higher bottom formations, the last breakout was at 300, which was done with very large volumes. So the structure is positive. One would have a stop loss below 410 and expect first a test of 460. And once it crosses 460, that is where a range breakout takes place.
Right. Okay, that's the take coming in on JSW Energy. In fact, quite a few newsmakers out there. I just want to bring up the intraday graph of Z. News reports indicating that the merger with Sony is called off. Then clarification also coming in that, that's only speculative news stories that you're currently seeing. While the stock may have lifted off from the day's highs, but it's still under pressure by a good 7% as we speak right now. A bunch of other names which are actually resilient in this market U-turn that we're seeing, especially with banks. Look at Godrej Properties, 3.25% higher, DLF up 3% right now. So real estate continues to chug along very smartly. And last week as well, you saw that massive move coming in on realty names, which refuses to subside. Andrew, clearly seems like, the market has more appetite for realty.
Yeah, no, I mean, I think, from all the indications from the companies and the kind of sales that they're enjoying, the kind of growth continues to apace there. I think also, I think, because the banking sector is not really reflecting some of this buoyancy in the economic growth, then real estate is obviously a bet on two things. One, the demand being very high. And two, interest rates will start to fall sometime this year, with maybe the Reserve Bank in the second quarter reducing rates by at least 25 basis points. So that will obviously have a great kind of tailwind for the real estate sector. Despite the demand being very strong now, this is an extra tailwind. So I think maybe because the banks aren't reflecting any of this, the real estate sector is benefiting from it.
I'd like your opinion on media stocks, the way, beyond Z as well, DB Corp, HT Media, many of them, including Sun TV has actually done pretty well. And of course, the ad spends in the space has also gone higher. Some of them also have an option value of some sports angle also. Sun TV, for example, has a cricket team in there. I like your opinion on that. But before that, there is an interesting saga developing on the Z Sony merger as well. Ankur is here with additional details on whether the deal is moving forward or not. There was a big gap down this morning and the stock has recovered almost 80% of those losses. Ankur, what do you gather?
Yes, there are two parties to the merger, and on one hand, Sony, as per sources, is not very keen on extending the merger timeline. However, Z has clearly stated they are committed towards the merger and they are continuing ahead for closing this deal. Now, this is important because you would understand that 1 month grace period after December 21 is expiring on January 20. Remember, it was a 2-year merger timeline which was signed by both the parties, which ended on December 21, and after that both of them agreed on discussion whether or not to extend that merger timeline. Now, as per sources, Sony was not very keen on continuing with the extension of that merger timeline. However, Z is maintaining that they want to continue with the merger and they are committed towards closing it. Now, all in all, it depends on the fact that whether or not both the parties agree on who will be the next CEO of the merged entity. Because as per sources, the agreement was not made whether or not Puneet Goenka can be CEO of the merged entity, and that was the bone of contention between both the parties. Now we need to wait and see till January 20 at least, till that time, if at all an agreement is being made between both the parties.
Yeah, Ankur. Andrew, have you looked at this space? Silently, the space stocks have done very well in the last few months.
No, it's not a kind of sector I've really focused in on, and obviously it's nice to watch from the sidelines what's happening. I think I think for river stocks, I mean, obviously all the kind of merger activity has kind of helped these stocks along the way as well. And maybe if some of these mergers don't happen, they'll be the beneficiaries as well, because the kind of the competition is going to be a little less severe. So it's, as I said, it's not a sector I really I really follow too closely.
And the mightiest of them all has really been Sun TV. Of course, it's not a pure play media play. It's got that IPL exposure as well. In the 3-month basis itself, it's seen a gain of about almost 20% or so. And I think what would be more pertinent is to bring up the 1-year chart. That's where it's made more gains. But as we take a very quick break, the countdown has begun. Mark your calendars for the 11th edition of the IDFC First Bank presents ET Now Leaders of Tomorrow Awards. As India's longest running TV show, ET Now Leaders of Tomorrow has championed the development of the startup, SME and entrepreneur ecosystem in India for over a decade now. In the 11th season, this time around, we're going to be focusing on innovation as a key catalyst for growth and disruption with the theme Innovate to Elevate. Leaders of Tomorrow Awards will be acknowledging remarkable strides made possible through the power of change.
All right, let's take the discussion forward with chemical stocks, because the export data on the channel checks is actually showing a mixed picture. Lisa is here with the detailed analysis, the stocks which are showing good sequential growth and the ones which are continuously showing weaker data. Lisa, tell us, what do you gather?
Right, so the chemical exports data is out for the month of December, and as per channel checks, the declining trend that was seen in the last few months, the last few quarters, that has continued for December and third quarter as well. Most of the companies, they have reported a decline on year-on-year basis as well as sequential basis. But the companies that stood out and gave a good performance, that was Aarti Industries, Anupam Rasan as well as Atul Limited, that they have reported sequential growth. And the companies that have fared the worst, that was UPL. They reported more than 50% degrowth on year-on-year basis, as well as 39% on sequential basis. And even SRF, they reported a very poor performance. It was a degrowth of 40% on year-on-year basis and 21% degrowth on sequential basis. So SRF, they had given a guidance of single-digit growth. That seems a bit challenging now for SRF to achieve that guidance. Moving on to Navin Fluorine, the performance in CDMO business, that was also poor, but on the other segments, that is HFO as well as specialty chemicals, they have done relatively better than the CDMO business. And lastly, Archean Chemicals, they reported a solid November growth because this was on the rise of bromine prices. But then in December, the growth has seemed to be moderated on the back of stable bromine prices. So that was on the chemical exports data, and where most of the companies have reported very dismal performance on both year-on-year as well as sequential basis.
Thanks very much for that. Hold that thought. We'll come back to you on an interesting IPO, which is also around the corner. But Andrew, what are your thoughts on chemicals? On the one hand, players like Aarti, etc., have not slowed down their expansion despite of a weakish phase in exports. One of the other big companies like UPL are coming out, and the promoter wants to raise their stake via rights in this cyclical low. Is it time to start accumulating chemical stocks, or you think it's early in the cycle?
I still think it's a bit early. I mean, if you take a view, which we are, that the US is going to head towards recession, and obviously that will drag the other areas down, other countries down as well, including Europe, which is also being affected by China's slowdown. I don't see exports as being the way forward in terms of the theme at the moment. So I'd rather wait and see how quickly the interest rates start to fall on the back of very much slowing growth globally, and I think that will probably get us towards the bottom. But until then, I would just sit on the sidelines. I think there's time is on our side before looking at the chemical sector as a whole at this moment.
Okay, Andrew, stay with us. Lots more to talk about. But talking about the IPO market, Lisa, let's hear out the subscription data so far for Jyoti CNC.
Yes, so Jyoti CNC, the IPO has been subscribed 1.7 times till now. And talking about the company, well, it's a CNC machine manufacturing company. The order book has been around 3,300 crore, where 10% of it comes from the EMS, global EMS company. It's the third largest player in India with 10% market share. And they also include marquee clients like ISRO, BrahMos, Tata Advanced System, Bharat Forge, Rolex Rings. Talking about the IPO, the subscription that began today, that will end on 11 Jan. The tentative date of listing, that is on 16th Jan. And it's an issue size, the total issue size, that is around 1,000 crore, where major portion, I mean the almost 100% portion is for fresh issue, and there is no portion for offer for sale, and the implied market cap is around 7,500 crore. The objects of the issue, around 400 crore, that will be utilized for paying off the debt, and the remaining that will be used for paying off the working capital. So that was on Jyoti CNC, which has been subscribed 1.7 times till now.
Okay, that's some extremely vibrant numbers, and look at the kind of appetite that this IPO is seeing. It's already subscribed 6.5 times on the retail book, and I think 3 odd times on the HNI segment, or the the HNI segment. But Andrew, what's that telling you about as to how niche paper is finding huge appetite in the market? You know, case in point being a JNC. I don't know how much you've looked into the prospectus and the company details or not, because valuations clearly after a point are not a consideration.
No, I mean, I think well, we've seen quite a number of the IPOs opening up at lesser discounts recently, haven't we? So I think the investors are coming a little bit more discerning in terms of which companies they really want to bet on for the future. And I think that's the good thing about IPO market is you are getting new companies, which can grow a lot quicker than maybe some of the existing, within those sectors. So I think you have to look at each one individually and work out what kind of premium you think you might be able to get. And also what kind of target price you would have for the future, because it's not just the opening day listing price that you're playing for; it's a longer term. So I think once you've done that homework, then it's fine. But at the moment, I think the IPO market will probably kind of settle down a little less exuberant than it was, say towards back end of November, December.
Let's also hear out the management of Jyoti CNC on their margin outlook. How is it likely to improve from here on?
In terms of its $80 billion size of industries, India is close to $3 billion, and India is growing, is more than 20% and going to grow more than 20% in there. Let's say it's a pre-COVID level. We were always at 20-22%. Okay. And now it's coming back to normal utilizations, and these are two main growth drivers are coming. We are expecting a little bit more than that in a past average. Let's say in a H1 number, if you look at that, in H1 we are already from the last year H1 to this year H1, we are already 4% has been improved there.
Okay, Andrew, we'll let you go on that one. Thank you so much for joining us on the show today. The market, kind of reversed from the top. They stabilized, still in the green, but not, of course, sharply off highs. How would you trade the rest of the half an hour or even take positions overnight? Kunal, coming to you first.
So I'll probably, in terms of futures position, I will still be bearish on the bank Nifty at current levels and have few sell trades. So HDFC Bank is the closing trade, which I would initiate on the short side. I think still at 1655, 1660 mark. I would expect the stock to come back towards at least 1620 before the bearish pattern sort of negates itself for HDFC Bank.
Naresh, what's your reading on the weakness in banks, and would you also pick any of the banking counters as a short on closing trade?
So on the banks, looks like we are again going to retest those 47,000 levels. But technically, the momentum is not strong on either side. So that's clearly an indication that we are not seeing follow-up, implies we could get into a sideways consolidation. So out here, this is the time when you don't want to trade a lot on the indices, go stock specific more on the mid-cap side. So out there, the spot of strength has been pharma, and that is where we've seen good strength. So that is where my next stock comes from, that is Granules India, which gave a breakout and is retesting that 400, 410 mark. So could see a bounce back from here. So would continue to play defensive and go with Granules India as a closing trade.
Right, okay, that's the take coming in on what some of the closing trades are. But just a day before Vibrant Gujarat Global Summit kicks off, Prime Minister Narendra Modi is meeting global CEOs and other global dignitaries as well in Gandhinagar in Gujarat. In fact, my colleague Sumit Chaturvedi joins in with what the agenda for the Prime Minister is going to be like. Sumit?
Vibrant Gujarat 2024 Summit is going to kick off in Gandhinagar, Gujarat tomorrow. But before that, today is a day of high-profile meetings between PM Modi and top world leaders and global CEOs. Today's meetings, they have already happened, and these includes PM Modi's meeting with DP World's president, Suzuki Motors president and Micron Technology president. The discussions took place with DP World president that included investments in logistics, investments in green ports and other infrastructure, with Suzuki Motor investments in scrappage, also auto exports and other policies when it comes to automobile. Gujarat is a big automobile hub. Also, the meeting with the Micron Technology president, it included how to promote India as a destination for chip manufacturing. These were the big global CEO meetings that have happened today. It's a diplomatic day also for PM Modi, who's in Gujarat from 8th to 10th of January. Mozambique president has already landed. Timor-Leste president, the meeting with him has happened, and the big thing is the roadshow with UAE president that's going to start from the airport. So a big day of today's meetings. Vibrant Gujarat Summit started in 2003, and this year it's going to have around 28,000 MOUs, and who's who of the corporate world from India and overseas is going to attend this summit. So big day of PM Modi's meetings as far as world leaders and global CEOs is concerned.
Who's who? The one who everybody is really watching out for is
Elon Musk.
Clearly.
Yeah.
So that is a special guest which everybody is talking about, will visit Vibrant Gujarat Festival this time
I'm
around.
sure he's going to be papped at the Mumbai airport.
Yeah,
We'll know when he makes his landing.
I think he'll land there directly.
In Gujarat?
Yeah, he will land there directly in his, latest jet, private jet. Take a break.
Okay, take a break. Come right back. We'll track the last half an hour of trade. Back with closing trades right here in ET now. Let's just revisit the closing trades because there's been a sudden fall in the market, led of course by banks. The Nifty bank has fallen a lot more, of course, led by blue chips like an ICICI Bank, HDFC Bank, SBI, once again, which are weighing heavy on the index as we speak right now. Besides banks, there's also media, textile, telecom, even FMCG has cooled off, cement has flattened out, chemicals as a sector as well, and technology ahead of its numbers this week is in any case looking a little bit nimble as we speak right now. But Sudeep Bandopadhyay too joins in on the show right now. Sudeep, hi, afternoon. Good to have you on the show as always. Sudeep, seems like the market is definitely going to pause here, if not dip, especially in the context of the speedy rally that we had ever since the state election verdict.
Absolutely, Aisha. I think we had a fantastic rally and a little bit of consolidation, little bit of pause, and also some amount of profit booking is not anything to get unduly perturbed about. I think this is good for the health of the market. Bit of consolidation is good. Of course, this came on the back of strong US economic data, and that probably led to the feeling that US Fed may not start the cuts immediately, and that led to the bit of a risk aversion amongst the FIIs, and that did spook the markets globally. India is also a part of that. Yesterday we had seen corrections. Today we had a smart recovery, but some amount of caution is creeping in. Remember, we are also heading to a result season. Day after tomorrow onwards, the IT big companies start announcing the results, and market will take cues from the results and move on. I think the next main trigger, apart from the results, will be the budget on 1st February.
There's an individual counter which I want to discuss with you, Sudeep, and that is Phoenix Limited. If you look at the last 1 year chart of Phoenix, it rallied hard, went into a sideways correction and some kind of comeback. Just look at today's action also. It's going into a new territory of 2700 odd. I was looking at income tax filing data. Till 31st of December, the data shows 82 million people have filed for income tax. And guess what? Those taxpayers earning between 5 lakhs to 10 lakhs have actually tripled in the last 3-4 years. This is essentially the mall going population, and the way these guys have charted a tier 2, tier 3 expansion strategy. Do you think this is a nice play for a 2 to 3 year period, the Phoenix Mills, which actually has Phoenix malls all across?
Absolutely. In fact, you're absolutely right in stating that they have charted a fantastic tier 2, tier 3 strategy. You will see gleaming malls of Phoenix in cities like Indore, Lucknow, and the likes. And this strategy is, I think, working very well for Phoenix. Also remember that, the consumption theme, overall consumption theme is strong. We may see a bit of a dip here and there on the consumer durable and FMCG companies numbers. That's on the back of a little bit of softening in rural consumption, but urban consumption is strong, and that to an extent gets reflected in what's happening at the malls. So obviously Phoenix is reaping the benefit. Also, they have raised quite a lot of funding from credible sources, and a lot of new projects are in the offing. Yes, for a 2-3 year period, Phoenix definitely is a good buy, even at current levels.
So Deep, let's not stop there. Other than Phoenix Mills, any other interesting ideas that you're working with for the long haul, of course?
Well, I think some of these companies, like we were looking at CG Power, and I think that's one company which is poised for big opportunity, and I'm pretty confident that the quality of management will enable them to seize that opportunity. I think pretty much all the business segments they are in, there is a fantastic traction, and they will definitely reap the rewards. And that is one company where I'm reasonably confident that things should move in the positive territory from here on as well. And one can look at buying that. Larsen, of course, continues to be my all-time favorite, and they continue to remain my favorite, Aisha. If you do a peer comparison vis-a-vis ABB, Siemens, and many other stocks in the cap goods space, I think Larsen is still quoting at a very reasonable valuation. So Larsen definitely one should have in their investment portfolio. If they don't have it, buy it now.
CG Power, L&T should be part of your portfolios for the longer haul, and of course L&T part of the core portfolio. But Sudeep, stay with us. In the run-up to the Wharton account, we've got some special news lined up, and we understand from our sources that the government will not be going slow on capital expenditure in the interim budget. In fact, ET Now has been learning from our sources that it will announce a 10 to 15% proportionate hike before the final budget is announced in July by the new government. Prakash Priyadarshi, my colleague, has more details. Prakash?
Yes, we are learning from our sources that the government is likely to make better balance between fiscal prudence and capital expenditure target in the interim budget. Sources are informing that despite being an election year, government will go ahead with the realistic capital expenditure target, and proportionate announcement could be made in the interim budget. Sources are informing that capital expenditure target is likely to see 10 to 15% increase as compared to last year, and some key infrastructure sectors like railways, housing and NHI will see higher allocation. Allocation for these sectors may be increased by 10 to 25%. We are also given to understand that despite being an election year, government will stick to its fiscal management target, and there will be better balance between revenue collection and expenditure. Sources are also informing that the tax and non-tax collection will be taken into account before making any such announcement, and the government will try to achieve 5.9% fiscal deficit target for the financial year 2024 and 4.5% fiscal deficit target till 2026.
5.9 for 24 and 4.5% for 26. Sudeep, how do you think the street would react to this assessment on fiscal deficit?
I think that they should be pretty comfortable. There is no problem with that, Ajay. And I think one other thing I must point out that the decision to continue spending on account of capital expenditure, even in an interim budget or during the election year, I think is a very, very good move. Forget politics, forget elections, forget everything. Why should the economy be slowed down when there is an election coming? I mean, that's absolutely not fair. So economy should continue to chug along the way it's supposed to chug along while elections and other things keep happening. That's how it should be, and that's how I think the government is deciding very rightly on those lines.
And I was just discussing, Sudeep, moments back, that what do you think the government, if they continue in their position, would do differently? There is a camp which is looking for new triggers. What new reform areas would they actually press upon? The other camp believes that they may continue with doing more of what they've been doing in the first 9 years. So more of land, real estate, and this kind of reforms in infrastructure, roads, etc. Which camp are you? You think they'll have some new cards on reform front, or more of what they've already been doing?
Well, I think they will definitely, Ajay, continue to do what they are doing, but I would hope and pray that they do lot many more things. I think one area where I'm a little surprised that in spite of all the good intention, the divestment thing has not moved really, and that's really unfortunate. While the government is doing pretty good on the fiscal front, that doesn't take away from the fact that disinvestment has been a kind of a disaster. We haven't been able to meet targets ever really, and the market is at the level at which we are. I think it makes tremendous sense for a government also to do disinvestment periodically in a structured manner, so that those resources become available for the government to do newer capital expenditure and newer projects. So I think disinvestment is one area which needs a rethink, and there needs to be a structured, calibrated approach to disinvestment on a continuous basis. Like today, we are sure, as you are rightly saying, that the infrastructure work will continue, irrespective of whatever happens. I would like a scenario where disinvestment continues irrespective of whatever happens. I think that's what one single thing I would like to look. I think it's been on the agenda of every government for last 15-20 years. But somehow this has not been achieved, and this needs to be done.
Interesting. Yeah, that's been a long wait, right? The disinvestment process. But, just Sudeep, to pick up on the point on more of the same, more spend on infrastructure and more focus there. Other than L&T, which you talked about, which should be a must-have in everyone's core portfolio, what are the other ways of, getting exposure to this thinking of the government?
Well, there are 2-3 areas, Aisha, where there is a lot of work already happening. I can't talk about the future. One is, of course, defense make in India. The second, I would say, this entire railway sector. The third is the power sector. Now, this and the power includes gas and pretty much everything which goes to generate power or transmit power or bring power to homes. So these 3 areas, tremendous amount of work is going on, and I think election, no election, this will continue. Amongst these 3 sectors, my belief is that defense has pretty much run ahead of the ground reality. The share prices have run pretty ahead of the ground realities. So time consolidation is definitely on the cards. As far as railway stocks are concerned, I would maintain the same view, that the run-up has been very sharp and time correction is warranted. However, the entire power sector, now there are power generators, there are transmitters, there are gas distribution companies, gas producing companies, and a whole lot of ancillary companies. Now, this is one area where I strongly believe there are still excellent opportunities, and all these companies have a significant opportunity of exponential expansion over the next 5, 7, 10 years. So, if you don't want to do hard work, go and buy NTPC. There is absolutely no problem. Now, NTPC was a thermal energy company ordering boilers to BHEL. Now, apart from doing all that and more, they are also a green energy company. And that, that corporate restructuring or creating a separate company may happen at some point of time. Even without that, I think it's now 2 companies, one green energy company, one thermal power company inside NTPC, and definitely deserves even better valuation. One can look at JSW Energy, one can look at Tata Power. I mean, all these are good stocks to buy for 2, 3, 5 year time horizon. You can look at power ancillaries, you can look at gas distribution companies. I think this is one area where there is still valuation pickup opportunities.
There's also one stock from the Kirloskar group. Nuresh, I want to check with you on the charts. Kirloskar oil engines. Look at how industry is shot up, and right after that, oil engine in the last 2 minutes has shot up. If you look at the longer term chart, you would see from its high that retraced a bit. Is it ready to go back to its previous highs?
So this is a stock which is tough to trade because it's been a very slow and steady mover, not many major moves on a daily basis. And over the last 1 year, the stock has done really well after the big Kirloskar breakout post the analyst meet. Since now, from that point of time, from 300, the stock has gone up to 650, 700 levels. So at current levels, one could trail on to the position if the stop loss at 650, but not the best stock to trade given the slow and steady move.
Not the best stock to trade, but yes, it has given a very good move in the last another stock. In fact, I would like to talk to you about it, Kunal, because you track Poonawalla Finance. It's Kirloskar's neighbors right there in Pune. From 450 it went to 220, and ever since KK Mistry has come there as an advisor, the stock has retraced all the losses and making into new 52-week highs. Is it going towards 500 or higher?
I think 500 should now be a matter of few days.
Okay.
Looking at the way the stock has rallied. So I think in the last 3 months, the stock has moved from 350 levels to now 470, 475, where it's trading. In the last just a couple of days, the stock has moved up from, I think, 440 levels to 475. So looking at the way the stock has moved up in the last 3 months, in the last 3 days, I think the momentum is extremely charged up for the stock. And I was, I scanned through this across multiple time frames for the stock in terms of volume breakouts, indicator breakouts, and this looks like a stock which is now getting warmed up into a much more longer term uptrend. So 500 could just be a matter of few days, but I would probably sense that the stock should be good for much more higher levels even from those points.
Okay, that's the take coming in. And Poonawalla FinCorp, of course, has had a phenomenal ride of late, and that stock still continues to hold high, 3.5% higher as we speak. Can we take it across to Samir and get in some more info on the textile sector? Yes. In fact, the textile space comes into the fore as the union government, as we understand, has set aside a $100 billion export target as well by 2030. And it's learned that FTAs with countries like Australia, UK, Canada, among many others, are all set to open new opportunities for textile exports. Samir Dikshit joins in with more details.
A number of initiatives have been taken by the government to strengthen the entire textile, ecosystem, which will help in, improving our manufacturing capabilities and make us more and more competitive in the global market. So one of them is, of course, the PLI scheme, where we are hoping that, with the scale and size that our manufacturing, that our participating companies would be able to achieve, it will lead to economies of scale and, bring down their cost and make them more competitive. We are also focusing in the PLI schemes on the sunrise sectors of MMF apparel, MMF fabric and technical textiles, which have a lot of potential in the global market.
You have set an ambitious target of $100 billion export by 2030. That's quite a big task. FTAs alone, how much it's gonna support it? And in addition to this, would you also like to explore some new market if any name it is there in the pipeline you want to share that?
Yes, we are looking at achieving an export target of 100 billion by 2030, and in fact within that we are also looking at achieving about 10 billion from technical textiles alone. We are presently at about 2 billion technical textiles. So yes, we do have an ambitious target, but it's we are working towards that through the initiatives which I've just mentioned. And in fact, in technical textiles, we also have a national technical textile mission, which is looking at enhancing our innovation and research capacity in technical textiles and developing more and more applications which will find a market. And also promoting exports. So our focus is sort of a, it's a multi-dimensional approach towards achieving this target, and we are hopeful that our industry is very dynamic, and the industry is fully sort of how should I say, even excited about coming together and all these stakeholders working together to achieve this sort of a vision that we have for the textile sector.
That was the Textile Secchi talking about $100 billion potential textile export target which India is setting up. Well, while all of this is very ambitious and very welcome, Sudeep, but the fact of the matter is that every now and then, competition from our neighbors in Vietnam and Bangladesh also surges. Do you think Indian companies like Gokuldas and many others can really fight this competition and still, make a mark on exports front? Would you buy them?
Absolutely, Ajay, they can definitely fight. And some of these FTAs which are being currently negotiated by the government, particularly the UK-India FTA and some other FTAs can swing the thing in their favor, the balance in their favor in a very, very big way. Indian textile companies have world-class manufacturing capabilities at this stage. Their products are appreciated world over, and just a little bit of help by way of FTAs and appropriate trade agreements can take them to a different level altogether. And I don't think Vietnam or Bangladesh or some other smaller Southeast Asian nations can compete with the scale and size which India can produce. So yes, Gokul Das and many others, why only Gokul Das, many other Indian textile companies, Indian terry towel companies, Indian technical textile companies can really be world-class players in the global stage.
Right. Okay, that's the take coming in on where the export story is headed, especially for the textile plays. But let me take it across to Sharad, find out what the dealing room chatter as well is and what are the stocks which are being talked about. Sharad?
In focus is latent view technologies, and what we are hearing from the dealers and the buzz is that strong buying is coming in some certain counters in the HNI segment. Now, even if you look at the volumes itself, that has come up almost 3 times its 20-day average, and importantly the stock has snapped its 3-day losing streak and going past the important 50 DMA mark as well. Now the key DIs already invested in the stock includes the name of ABSL mutual fund as well. Now importantly, the Q3 numbers will be coming on January the 29th, and the street is expecting the management commentary, especially coming in from the European markets and the margin outlook going ahead.
Okay, that's the stock being talked about, latent view across dealing rooms, of course, holding up 4.5% as well as we speak right now. Before we wind up, Sudeep, have to take a call on IT as well, because soon we'll have the IT majors, come out and announce their numbers. Any scope of a surprise here, or you think it's much in the price that it's going to be another weak quarter?
Well, definitely it's going to be a weak quarter. I think, Aisha, more than the profit and loss numbers, what the market will be watching is the commentary, and that is what may bring in some surprises. If you recollect earlier quarters also, the management commentary is what led to the price correction and the other way around. So this quarter also the management commentary will be very important. I will be very keenly watching Wipro. There has been a lot of turmoil, question of or the rumor of a management change and things like that. And they, of course, are most attractively priced among the big 4 IT companies. So I'll be watching Wipro very carefully.
Wipro on the radar. That's the word coming in from Sudeep. Sudeep, good to have you on the show. We'll let you go on that note. Good you took time out and spoke with us today. Let's just see where the market is actually settling in at for the day, and whether you're seeing any move up coming in or not. But no, while we've made it back to the green, it's not a meaningful recovery by any means. Of course, there are names like a DLF, Siemens, MFSL, Godrej Properties, ABB, which are all propping up. And amongst the large caps, there's Adani Ports, Hero MotoCorp, Adani Enterprises, Bharti, which are also scaling higher, as is L&T. But banks, they continue to be beaten down. And Kunal, no resurrection there, no rebound there, right? HDFC, Axis, SBI, still status quo.
Yeah, the fact that these stocks were unable to break past our yesterday's high, even with the gap up, and these stocks making fresh swing lows for themselves after yesterday's sharp sell-off and today's bounce combined, I think that itself tells you that there's pronounced weakness into these stocks. The premiums dropping for many index futures, stock futures specifically, as well as the both the indices Nifty and Bank Nifty. I think that's also a bigger point of concerns. It also indicates that the markets are not just tilting towards shorts, but then there's also fresh additions of shorting, which is happening to these large cap private sector banking names. And I think it's now not just restricted towards HDFC Bank. I was actually looking at the charts for Axis Bank and IndusInd Bank. Even these stocks have shown mild fresh addition of fresh short positions. So maybe we could probably get into that spiral over the next couple of days, where many of these private sector banks can start to get into a sharpish correction over the next couple of days.
Right, okay. So STBT trades then, Kunal, once again?
Yeah, so I think HDFC Bank remains to be a short even at current levels, and my sense is that the stock should ideally fall down towards the 1620, 1625 mark. So maintain the targets there for HDFC Bank. Stop loss I have trailed to now 1680 for traders who are initiating a fresh short at current levels. Gujarat Gas apparently is a stock which is looking attractive. The stock is now perched at 510, 515 levels, so would suggest a buy. Targets of 544, stop loss at 500.
Right. Naresh, what about your closing strategies or BTST trades?
So 2 BTST trades more from the defensive side. First is a buy on Granules India, which has retested the breakout point and reversing. Stop loss at 408, target price of 420. Second is a buy on Bosch Limited. The stock continues to make new 52-week highs today. Good follow-up even in such markets. Stop loss at 22,600, target price of 23,200.
Okay, and with that, let's wind up for the day. Let me take it across to Vinny to find out how the closing is shaping up. Vinny?
So let's wind down, and when you look at the Nifty, nothing exciting that's happened in the last couple of hours for trading. Nifty was down and out in trade. 21,550 levels is what it's managing to hold on to of the day's highest point, closing near the day's lowest point. Sensex 2 similar trends, down holding on to gains of only 0.1% in trade. At one point of time, both the benchmark indices were up almost 1% in trade. Bank Nifty, that's the main cause of the decline coming in. Financials is where we saw the sharp fall coming in the last hour and a half, and that is what led to the fall as well. So when you look at an HDFC Bank, the heavyweight there, ICICI Bank, SBI, all of those names were the drags coming in from the Nifty banking space, and HDFC Bank also down almost 0.7% in trade. When you look at it in terms of other sectors, when you look at what is happening to the broader markets actually was something that was holding on to gains and managed to outperforming the benchmark indices, and that is why when you look at the advance decline ratio, still in the favor of advances versus the decline. Broader markets holding on to better strength than the benchmark indices. Other than that, Nifty IT that gave up from the top sectoral gainer, now just holding on to some bit of a gain of 0.5%, almost there for the Nifty IT. While in terms of Nifty Realty, that continues to be the top sectoral gainer. So see something like a DLF that's holding on to some gains as well in today's trade. Nifty Realty up almost 2% as well. Looking at some of these auto stocks, Bajaj Auto, Tata Motors, TVS Motors all have been in focus. Bajaj Auto still holding on to some bit of a gain after the buyback has been approved of around 4,000 crores as well. Other than that, Z, that again saw a decline coming in despite the clarification that came in from the company. We're seeing a decline still holding on for Z as well after a recovery. Yes, again back 7 to 8% downtick is what we're seeing for Z as well. Other than that, smaller names like an Inox Wind that's holding on to a bit of a gain at one point of time. But as of now, also Inox Winds, Capside Infra, Bandhan Bank also came with a clarification where we saw a bit of a recovery coming in for Bandhan Bank as well. So yes, Bandhan Bank still managing to hold on to some bit of a gain there as well. So that's how the market roundup is looking like. Mainly the financials led to the fall in the last half an hour. Benchmark indices down, holding on to gains of 0.1%.